Welcome, John.
Dale, can you hear me?
Got you, Bruce. Great to hear your
Oh,
voice.
oh my gosh.
I
Great
was
discussion this morning as always.
I was going through withdrawals now talking to Bruce Fraser. If I don't get a Fraser fix every 3 months, I start jonesing. So anyway,
Well, I talk to myself all the time.
I do too. You know what I say to myself?
Uh,
Why did I come into this room?
well,
what was what am I doing in this room? I know I had to do. Anyway, I think I
we,
saw.
we must be about the same age.
Yeah,
Dale
we
and I
are.
actually came into the business around the same time, both at Dean Witter, right?
Yeah, that was my
Yeah.
first job as a runner with Dean Witter,
Yeah, I was
and
with Dean Witter. Yeah.
yeah, and then
So,
after I was a runner, and then after the close at the Merc, I'd go sell washing machines at Dean Witter Sears. Remember they
there you
moved
go.
to Sears, so I
Stocks,
moved.
socks, and shocks.
That's it, buddy. Anyway, I think I grasped a headline of an interview that you did with Blake, and I think the title was, things are changing, and so that tells me that you were getting some stuff to, kind of foretell a correction happening in the market. Did I read it correctly? Okay,
I
there
think
it
you
is.
did. And then also, I put up a blog on April 5th. Let's
Yeah,
see.
there it is.
And it's I'm just seeing if I can get a pen if I need it here. Um, so people can go read this. It's at stockcharts.com. And also, Blake put it up. So thank you very much. And it's called Trifecta of Trouble. And it really just is a Wyckoffian view perspective of the markets. And at the April 5th, keeping in mind that was the end of beginning of a new quarter. And for anybody that follows me at all, they know that I'm obsessed with quarterly market behavior.
Right.
And a number of indexes came in and made ultimate highs around the third, fourth week of March. March 21st first comes to mind, and so on.
You know why?
So
It was the equinox. It topped S&P's top 2 days after the equinox.
there it
WT
is.
and thank you,
There it
because
is. And
he said look for turns around the change of seasons,
well, and
and
keep
that's
in
like a
mind that the
quarter, huh?
the institutions really drive this thing, and they really are driven by the end of quarters, up or down. And so here we can see here. Look at this persistency in this uptrend. This is the S&P 500, and up it goes. And it started late October, late into the end of the third quarter, beginning of the fourth, and went up and through over the top of this channel.
Right.
And we call this an overbought condition, a throwover. Wyckoff is very old school. It goes back to the late 19th, early 20th century. And so it's very much oriented towards price bars and volume.
Where is
And
the throwover line, Bruce? Did we take it out, or is it
you
still
can you
holding?
can see it. I'm actually going to even update this a little bit, but you can see it like
Oh,
right in there.
yeah. Well, what's the price on the throwover line? Do you know?
Let's do this.
Make it bigger.
Maybe that helps. That's around,
Oh,
I would say that's around 50, 5150. And I'm
okay.
going to
So
show you
we
some point and figure work that pointed to
okay,
5250, which is exactly where it went.
okay.
And
So that's an interesting area because I had a 9-week moving average there that I said if it was broken, there was a lot of space underneath the market. So if we're going to get a rebound here, it looks like we are from here, from
well,
today.
look at all this room inside of this channel.
Yeah,
And
there's a lot. Yeah,
these are two trend lines that are both, you know, trend lines on their own point. So here we call this an overbought or supply line. Here and here, this is called a demand line. And note how each one of them is parallel. So this thing has been running up in a parallel fashion. And actually, this area down here is really important to a Wyckofian because we call this accumulation. And so the whole time, there's always a hook. I had a great old mentor, somebody who used to come to Golden Gate University and lecture a lot, and we became friends, Joe Granville. And
Oh, yes.
he called this climbing the wall of worry.
Yeah.
And there's always a hook. And this is the psychology. And the hook is back here was the Fed was raising rates.
Yeah.
Yield curve was extremely negative.
Right.
And among the most negative it had been going back to like the early 80s. And so this was a big worry for people. And the market just walked uphill against that. And at that time, you know, we were taking point figure counts and counting this accumulation structure because when pessimism is high, which was measurable throughout this whole accumulation area, when pessimism is high, that means institutions and the public has a lot of cash. So we always wanted to be really focused on the psychology, which you all were talking about just before I got on. And I think greed may be even the wrong term in that fears, I think, you know, really a very important term. But I think it's complacency, Dale.
Or in hubris.
Yeah. And so I think what happens is there's no complacency down here.
No.
There was complacency up here.
So what's
And
the
then
hook? What's the hook here, Bruce? Everyone's waiting for lower rates. You know, I think that we may be peaking without taking out 5% in the 10-year, and TLT could end up. This could just be a pullback from the October rally. Could the hook
yeah,
this
I'm
time be lower rates do not support risk?
well, and this yellow shaded area, let me pull up this is up to date now.
Yeah.
This is through yesterday, the 18th. And so you can see what has happened since
Yeah.
that it has fallen back into the channel. Now we could have a lot of volatility inside of this channel, just as we did from July, August into October. And the other thing that I think, because we did have a tremendous amount of optimism up here, so everybody was in love with this market. And what I got a big kick out of was down here, there was a lot of, you know, fear, concern. Up here, you know, you have people coming out of the woodwork calling for 6,500 S&P, 7,000, all that. Well, all that is endemic of excess optimism. And these are the Wall Street types. These are the opinion makers that are making these calls. And so we have to be really.
Graph.
This is such a good graph.
Yeah,
this is the
stock. Yeah.
This is the New York stocks above their 50-day moving average.
Yeah.
Which is a breadth style indicator. Right. And I use this a couple of different ways. Overbought, oversold. I look for divergences. So, and then the other thing is you get an oversold and then you start to get an upward stride. Well, that's a really good time to start looking for leadership in stocks and trading them, even for a swing trade. Yeah. So I'm looking for these, and I'm trading the best stocks in these oversold conditions once this indicator is starting to rise. And the best thing that could happen, and that's what this green shaded area is when you start to get divergence, because you can see lower lows here again, end of the third quarter of 22. The ultimate low below the selling climax. And this is already walking uphill. So we call this green shoots or a divergence. And you want to be looking for what are the individual stocks that are going uphill against a falling market and trade those for the subsequent rally. Now, we have a condition in reverse, which is that you can get overbought. And this is above 75, 80, 85%. And you get overbought and then you start to turn down. That's a point of caution. Divergences can last longer, but look look at what happened to these markets when it became overbought. They started to peak out and reverse. So here we got two things. We got an overbought condition right at the end of the year, and a number of stocks peaked out then. So the way to read this indicator would be, what is it that's peaking out above the 50-day and starting to turn down? And of course, we know the Mag 7 continued to just ramp ever higher, but there were a number of stocks that were no longer participating in the uptrend. And here you went to a lower high at 75% at the final peak. This is a big divergence here.
Yeah, that's what I was talking about.
Yeah. And so now look what it's doing. It's like going straight down and is now about 30.5%. 30% of New York Stock Exchange stocks are above their 50-day moving average right now. Okay. So now here, this is sort of the reason for, and now this is old school horizontal point and figure counting. And people find it very mysterious. It's a very big part of what I do. You're going to see a few of these today in whatever time we have. What do we have till 9 o'clock?
Yeah.
So this is that accumulation structure. You'll note here, this is January of 23. And we're in this accumulation area, and pessimism is extremely high during this period. A lot of cash being raised among investors and the public, and amongst institutions becoming somewhat more defensive. And look, so right at this point here, for a number of reasons, I concluded that this looked like the completion of accumulation.
I remember.
And this was right at January 18th, right at the beginning of the new year, 23. And so I took this count at that time, and this is a 3-box reversal method, 25-point scaling. And I got what I call segmented counts. And the counts that we're going to focus on here are these two up above. These came into play and were important, but here we had a count 50.75 to 53.50, 62.75 to 65.50. And this is the reason why I think that even though we may be in for a pause here, build up some pessimism, get traders, speculators, momentum people to raise cash, get a little more defensive. I think this could be the ultimate level this bull market goes to. And at the time, they thought I was certifiable. I'm saying we're going to go to new highs here, above 4,800, the 2021 bull market peak. And people thought I was certifiable. Well, then once we got to new highs, people are going, oh, we could go to 7,000. Right. But this is when it counted. This is when the beginning of a really good uptrend.
Is there anything in point and figure that would give you an idea of where this pause correction might complete? What price level?
Yeah, as a matter of, that's the problem with Dale is that, you can never stay ahead of him. He's always thinking one step ahead. So here,
I'm sorry, I can't help it,
man. This is the last reaccumulation before the bull market peak in 21. Look how well this worked out.
Yeah.
It went right to 4,800.
Yeah.
And so this was just a gorgeous count. And then here, this is one of the counts that was a segmented count that went 4850, 5200. Well, and then here's the accumulation structure count, and that goes up to 6350, 6700. Well, actually, we went right to 5250. And touched 5250 on the 50-point scaling. So this says this was our stopping point here around this 5200, 5250 area. And then if we went back to this is what I think we could do.
4,800.
is this is the resistance zone defined by the bull market peak of 21.
Yeah.
And this goes, the high of this area is 4,800, as I said before. I think it's very possible this could be the area that we go into.
Mm-hmm.
Somewhere between the high of 21 and the bottom of the distribution area, which would also make sense because look, we're coming right into the stride of this uptrend channel. We don't have to go all the way back down to it, but
yeah,
this is where the 200-day is.
Yeah, 46.70. Okay.
And so, yeah, so that's kind of what I think is going on. Now, here, let's see. This is a 60-minute S&P chart. I like to look at the intraday, both from a Wyckoff perspective. These are Wyckofian symbols. And you'll notice my charts are pretty messy. These are actually case study charts that I used with students. And my blogs, which the total archives are there for you to go look at, everyone, is you can go read about what these definitions mean and how we determine them. But here is a distribution structure on, this was April 10th, on the hourly S&P. And this is demonstrating distribution. And when we start to get a series of what we call last point supply, these are the lower highs that set up the ultimate markdown. This is simply an oscillator. This is the New York advancers minus decliners. And now here's a point and figure chart that I took on April 10th of this structure. And everybody just sort of keep this in mind. 50-10, 59-60 was the 60-minute count, which could very well constitute some kind of a swing trading target where we could get a rally, which I think would be another bigger rally to a lower high.
Well,
in this
last night
downtrend.
we got down to 49.60, Bruce.
Well, there you go. And we
49.75.
actually on the
49.75 on the low last night.
Okay, thank you for that because I did not know that. Here
there was the S&Ps were down 75 handles on Israel's drone attack last night.
Okay, and
fought their way back.
So as of the this wasn't the close yesterday. This was 2:40 Eastern time yesterday during the day, but we hit 50.05. So we did hit the minimum objective, and then you're saying we got even down to here overnight. Yeah. And so we have fulfilled the swing count, which appears to be some kind of potentially climactic event. And then I heard you all talking about how we could have even a rally by the end of the day today based on expiration and so on. Entirely believable. Entirely believable. And then here, see, here's the target zone of that point figure count that I just put up.
We got
so that people. Now this is just interesting, and then we can get a little bit into interest rates in the time we have left, or gold, whatever you want.
Go ahead, run the interview.
So here's the Dow as of June 3rd, 23. And you can see here, this is a reaccumulation style structure back into 22. And it's what I call a swing count, one box reversal method, point and figure. And I write a lot about how to do point and figure in my blogs, but it counted up to 392 to 404. At that time, this is June of 23. And this is just taking this segment. And this is where we went as of, and I believe this is the highest we've been in the Dow. Well, isn't this what you were talking about, the date for?
That's the equinox.
Equinox right here. And it happened for the Dow on that date. Look where it went, 398.82. Went right into the middle of our count objective range. So pretty amazing. And then here you can see this count you can see, I think that there's, I'm trying to think, there's a little bit of a difference in the way the count came up because this is 396. I think this is because it includes dividends. Anyway, this count, this gives you an idea that it went right to the count objective. So this is what happened since. And so this is as of April 17th. But now here's what the Dow looks like. This was as of the 17th. It went to 376.14. And this was our swing count. This is a daily chart and one box reversal, 2-point scale. You can see this is where it went, 376, 368, which we ended up overnight, maybe somewhere in here, Dale.
Yeah, you don't include that action in your point and figures, though, do you?
The overnight.
Yeah.
No, I don't. And I tend to get pretty good counts using just the exchange data. And but oftentimes when I do intraday, I will do the overnight.
Okay.
Because these Wyckoff setups occur overnight for sure. So now just this is the Qs as a surrogate for the NASDAQ 100. This is again February of 24. This is the count area. And then this is taking the widest part. Sometimes I'll take two counts, but the widest part of this count counted up to 449.46. And as of the equinox, 449.34.
Nice.
And so this is as far as we got. And you've seen what happened since. Here's the NASDAQ and what happened. Here's a point figure 30-minute of this distribution structure. Now, keep in mind, this is the lowest I've seen as of 418, 423.81. We have a count in this 30-minute data that goes down to 382.20, 376.32. So we do still have room to go down in the Qs. Okay. And they may be holding up better because of the Mag 7 type stocks, the growth stocks.
Okay, nice.
And note here also, look at how now this is the NASDAQ 100 stocks above their 50-day. This is the NASDAQ composite stocks above their 50-day. Much broader list, but in both cases, note how even these NASDAQ 100 stocks started to deteriorate off their peak at the end of December. Yep. So fewer and fewer stocks are driving the market up, and those were the mega cap names.
Yeah, and they finally caved, like Amazon.
Yeah.
And Microsoft.
Here's what has happened since, and look at this fall off. So now we're starting to get reasonably oversold in a number of the different breadth oscillators and so on. Being oversold is not a reason to start buying yet, because sometimes if we look really study bought oversold indicators, sometimes the best part of the move comes after you get reasonably oversold. Right. So we may have more weakness and lower numbers before this is over.
Yeah.
So, and then also again, look how low it got back here in September, October of 22. And look at the damage that was done from reasonably oversold to where it ultimately ended up. And then you had divergent characteristics.
You still need price action.
You still need, absolutely.
It's king. It's king.
It's king. That's why Wycoffians, we absolutely care about price action. So and so here is where our count takes us, and note how that is into the support area of the 2021 bull market peak.
Nice. You have time for an interest rate look?
Yes, let's do that. So here is the this is the 10-year treasury, and this is what I brought today. So we certainly could do other analysis, but we'll have to do it next time. This is the area that I counted, which was the accumulation structure from late 2018 into the early 22. And this count here, which was in the area of 1.7%, you just move the decimal point over one,
Yeah.
is 4.3 to 5.6. And we went exactly to 4.3 here.
It was a big area.
Pulled back, and then up we've gone, not getting quite to the 5.6, but we did get into the target zone. Now we're starting to push back up again. It is conceivable we could get to 5.6 here. If you look at the right now, this is the chart that's a little bit scary, but the reason I put it up because Dale and I survived the 70s. And we started in the business when interest rates were 14, 15, 16% treasuries. And
the good old days.
The good old days. And so what I did here, same chart, is I took the complete count of the structure, which goes back to 2012. And keep in mind, point figure can't tell you the when. It estimates the potential for the extent, which is hugely valuable, but it can't tell you when it's going to do it. So interest rates started to go up cycle after cycle in the late 60s and did not complete their upward move until the early 80s.
Yeah.
And so I think from an analog perspective, the 70s is a good roadmap.
Yeah.
And I think that we're somewhere around the early 70s. That was the end of the Nifty 50 era for stocks. And that's also, I think, the end of the Mag 7 era, which is what we're in now for the growth stocks. They're comparable in their excesses then and now. And it could be another 10 years before we see the high for interest rates.
Yeah, and that's that would mean 14% to 16%.
Exactly right. 13.9 here up to 16.1 is this count structure. And again, it could be years before that's even possible. And it may not even happen. Let's hope it doesn't even happen. And but this little swing count in here, which I included, and I do believe we could get there sometime in short order, is 6%.
Okay.
And so we may have to go here before we have a more meaningful consolidation and pullback.
What a great presentation. Another one by
So
Bruce Fraser. So, Bruce, if people want to learn the ancient art of point and figure, where do they go?
they can go.
Do you agree it's an ancient art?
Oh, there's no question. It's very old school. I
Is it
use very few.
older than candlesticks?
No, but I'll say
All right.
this. I'll say this. Point and figure, I believe to be as old as candlesticks.
Okay.
Maybe older, because that when they used to trade rice futures in Asia way back when, centuries ago, they used point figure charts to track rice prices and also did horizontal counting on those.
Wow.
So
Okay.
point and figure.
Great history lesson.
Yeah, point and figure goes way back. And I absolutely love point and figure. Go to my blogs, which are not behind a paywall, stockcharts.com, articles. You go right to the homepage. At the top, it says articles, and then just look for Wyckoff Power Charting. And you have access to all those. And then, of course, WyckoffAnalytix.com. Lots of great Wyckoff content there, too.
Yeah, what a guy to learn from, Bruce Fraser. So thank you so much, buddy. It was great. seen your work. You know, we've been talking for a few years now, right? At least two or three.
Oh yeah, yeah, yeah.
You know, I want to thank you for coming in
Oh my.
and sharing your work, because I know it's hard work to keep up all this stuff. I know you love it, but it's still hard work. And for you to come here and edify our community, we're all, you know, we all appreciate that you do that,
Well,
Bruce.
you've all been wonderful to me, and Blake and you, Dale, and others, and I love coming here. It's been fun.
Okay, don't forget who discovered you here.
Exactly.
All right. Anyway,
I owe you a
you
drink.
know, I'm your Colonel Parker. All right, Elvis. So, uh, anyway, Bruce, I'll talk. We'll get back together in the summer and see how a lot of these things are playing out. And I always root for you and much success
Oh, thank you.
going
Thank
into
you
the
much.
summer for you and all your subscribers.
And by the way, for those of you that want to do more or about, see more about what we talked about today, Roman and I, my teaching partner, uh, put up on April 10th a Wyckoff Market Discussion. Free. It's absolutely free. It's on YouTube, and you just go to this address at the top, and you can go watch that, and you can get more granular on some of the topics we discussed.
Watch it. And thanks so much, Bruce.
Dale,
Have a
thank
great
you.
have a great weekend. And everyone out there that watched this, have a great weekend. You join the team in about 14 minutes. And don't forget, don't just count your missiles or drones, count your blessings. Amen.
Amen.
Amen. So I'll see you. Thanks again, Bruce. And I'll see everyone Monday. We'll lay it out all on the court and try and bring in people almost as good as Bruce next week. Okay.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.